Good morning, it's Jonathan Barratt with this week's Market Buzz. Well, it's the first for the actual year. So, let's have a bit of a dive right into it. Let's just get this open. There we go. Okay, that's what we want. Okay, last couple of weeks, what's happened? Well, the big news, Venezuelan president is on trial in the US. Obviously, Donald Trump invaded, or I don't know what you'd call it these days, but invaded Venezuela and sort of kidnapped the president, to which he's holding for trial in New York, purely based on things like narcotics, those sorts of things, being part of a terrorist as well. So very interesting to see how that will play in the oil market. So far, it's been a little bit of a muted response, and I'd expect the same. Remember that Venezuela, more about this a little bit later, has the largest reserves, but they're not producing a lot, but we'll talk about that a little bit more. Okay. Obviously, we're waiting for the fallout to see what happens there. I guess other themes we're following, AI software providers, we think they may have overdone their capital pledges. That could be a little bit of a concern. We've also got US Manufacturing PMI that came out. That's once again confirmed lower. And I think if anything there, those economics are starting to remain a little bit weaker, particularly labour issues and inflation starting to pick up. These are some of the themes which we'll discuss a little bit later on in the show. Also, some of the commodities, copper, very close to a record high. Silver had a good rebound the other night, which is also very positive. And the US dollar remains relatively weak. So if anything, I think the themes that we've got continuing from 25 into 26, I think overall it's going to be a pretty bumpy year. There's a lot of volatility and there's a lot of unknowns. And there's a lot of push by the Trump administration into areas where perhaps they shouldn't be. And I think this will sort of provide the lead and a continuing theme for some of the commodities which we've had. The other likes of gold, likes of silver, copper, iron ore, which I think is very cheap at the moment. And when I come to equity markets, I still think that they're very hard to push to new record highs, even though we've seen the Fed. Remember also this year, we've seen the Governor Powell stepping aside, someone else coming in, and that gives the Federal Reserve sort of weighted towards the Bush administration, which also says that interest rates will start to ease a lot. I think there are 3 governors off there. They get 1 more, that's 4. They get the sway of power. So the Federal Reserve, it's purely in Trump's pocket. Okay, let's have a look now at a few things. I think when you look at it, we sort of understand what we think is going to happen into 2026. The volatility is going to be there because Trump has got a mandate, to do a lot, as we know. He's quite forward in his thinking. I think that volatility will continue. I think if I look at, first of all, the general economic conditions in the States, and I think that's very, very mixed. I don't see it that positive. In fact, I think more dovish we are, the more positive it becomes. But I think the Fed will hold off as much as they can on interest rates. Although the market's actually looking for a couple of another 0.5% or a quarter and a quarter next year, I think we'll be pushing to see that. In fact, I actually feel that will be more, only one more rate cut, and that's probably about it. We are seeing the general economy weakening, but we're also seeing inflation relatively sticky. Labour markets also weakening as well, but once again, price pressures remain to the top side. And I think if anything there, whilst that still hasn't reached the target that the Fed wants, so whilst it remains sticky, I think it's very hard to conclude that your easing cycle, that your tightening cycle is over, or that your easing cycle is going to continue. Remember, the tightening cycle was there through on market purchases, quantitative tightening there. The Fed's been using that side as leverage, but also interest rate policy as well. So if anything, moving into 2026, only looking for one more rate cut. That might support the commodities, if they might support the equity markets if they come under pressure. But generally, I don't see US equity markets pushing on to record highs. I don't see the reasons why that would actually occur yet. Anyway, let's see what happens. Okay, I guess when we look at a couple of things for a couple of the dynamics, I generally feel that when we look at some of the commodities, they still remain quite a large standout to me. I think that's going to be sort of gold. I think silver still a standout. Remember, gold, macro issues or geopolitical issues. Silver has an industrial and also macro as well, and geopolitical issues. Copper, We're looking there from a green standpoint and also supply shortages there. So if anything there, I think copper, record highs, and I think that will continue. US dollar theme, I think, will remain under pressure. So I think the US dollar is something. Remember also, having the US dollar under pressure also provides more competitive edge to US exports, and I think that's what Trump's looking at. So I think that without beam policy, I think they'll imply a weaker dollar will be good for US exports. And remember, if you're going to make America great again, you've got to do it from homegrown, and that's the export way. Okay, let's move from that and have a look at oil and have a little more focus on oil. Oil has not performed as well as other commodities. There is this oversupply in the market that people hang their hat on, although oil has remained in a very solid range. So whether the oversupply is there or not, I actually feel that the market is quite steady around that US $60 a barrel basis for Brent. And I do think that given where we are with China, for instance, I think she's actually moving out of the malaise that she's been in for so many years, and I think that economic performance will push China along and also push demand for other commodities likes of iron ore and also oil as well. So I generally think that when I look at China, I think that will help. I think that will really start to help the likes of oil, the likes of iron ore, and the likes of copper. But when I look at all the commodities, I do think iron ore and oil are probably the cheaper ones. In fact, when you do look at oil, I feel that why hasn't that moved just as much? Okay, we've got a lot of supply, I do get that, but there are a lot of ramifications, with where oil is at the moment, particularly what Trump's done, and that might come to bear. Very interesting. Venezuela only really produce only 1%. They used to produce about upwards of 6% of the global supply. It's only 900,000 barrels. They used to produce about 3.5 million barrels. So when I look at that, it's well down, and the reduction has always been on the back of infrastructure, decaying infrastructure. I think that's what Trump's really come in there and says, well, what's one way we can actually own the oil? And that's if we get US involved in there, get US corporate in there to start producing oil there. So if anything, the Venezuelan thing might be an issue. One of the other key problems there is that creditors to Venezuela, China, I think they're about $10 billion, also Russia. And also remember that Venezuela is a member of OPEC. So there could be some tail events that could also come in there as a result of what the US did, which could force the hand on oil. So we like it. We actually like oil going forward. Okay, so we've mentioned that. We've mentioned all the bits and pieces. So if anything there, I do expect the market to continue to remain volatile. But as I said, I like some of those commodities. In the report this year, you'll see that we've actually got a nice little chart there, which we like, and I'll just have a look at that so we can see it. So I'll just share my screen, and you get a bit of an idea of one of the charts that I am actually looking at. Now, this one here is the price of oil. In my mind, it's the Brent contract, and you can see why we actually like it. This whole movement is a nice consolidated type of trade, even when we get back to the highs of 125. So it's a daily chart. So I actually think that that if you do see movements, if you see movements coming down, break back above that 61, 62, and then we'll see it trade a lot higher from here. Good support around 58.50, as you can see, and I think I'd like to see a break towards the top side. But anyway, let's see what happens on that. Okay, let's see if we can have a look at some of the other trades. Okay, now it looks a little bit busy, but as you can see, there's some prices and some bits and pieces there. But let's have a look. Let's have a look at the S&P 500. That's the first one there, right at the top of the rates. You can see it right on the top side. And I actually feel that we might come under a little bit of pressure there. We're currently short that market, so quite happy to stay short and probably expect it to head back to that 6,500. So we like that. Local markets, just quickly looking once again, we've reached those record highs. We're coming back. We are short that market as well. And we're looking for a test back at 8,500, maybe even a little bit lower than that. Gold, we like, having a great run to the top side this morning. There's the daily chart. I'll just move that to the hourly chart. And you can see that we've had a great run this morning. I'd expect that to continue upwards and see it break 4,400 pretty soon, maybe even trade to a record high. Silver's the same, very volatile. A break through that 65 onwards and upwards, might even see 82.50 tested again. A little favourite, the Aussie little battler. Let's have a look at that daily chart. The daily chart there is looking quite good, looking positive. A breach and pullback, we've seen that. Wouldn't be surprised to see that trade higher. One thing I do want to make people aware of is the weekly chart. And just look at this, it's a great little chart. And as you can see there, it goes back a long way, this trend, and we've broken it. So I think that's something to focus on, the fact that you can be long the Aussie dollar. Aussie Swiss is pretty much the same there. We're looking for a break there and quite heavily long Aussie against the US. And of course, Brent, you can have a look at that, and you can see there that that's right on those lows. Okay, well, let me stop sharing there. That's about from me for this week. Hope everyone has a great week. Happy trading. It's going to be volatile, and we'll talk to you soon. Bye for now.